Traders, Gary Wagner here, just about 12:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, December 22nd, 2017, and this is the Daily Report for Gold and Silver. We do have the continuation of a Christmas rally with solid performance in both gold and silver. Gold closing up about $8.50, $12.79.10. Silver closing up well over 1 1/3% today, a 21-cent gain at $16.45. And that is in light of the U.S. dollar, which in essence was unchanged today, closing at 92.91. Now, we did have a slight softening in U.S. equities, with the Dow Jones Industrial Average losing about 28 points, 24,754, a 2-point drop in the S&P, and a 5-point drop in the NASDAQ. The same cannot be said for Bitcoin. Whether we want to say the bubble has burst or we saw tremendous volatility in the market, the facts are that within this last week, we have seen Bitcoin go from 10 to 20 and then from 20 down to 11,000, only to recover today at around 13,000 per Bitcoin. Tremendous moves in the cryptocurrency, 13,960 down 1330. That's basis the CBOE, down 1430 in the CME. And that closed at 13,900. Traders today witnessed a respectable price advance in gold and silver, with gold currently trading up almost $8, $7.80. Current bid price at $12.7850. Net change of about $7.90. The interesting thing about today's activity is that it is really a continuation from the lows that were exhibited when we saw this market bottom on Tuesday of last week, hitting an intraday low of about 1238 and moving up substantially higher. At this point, we have seen the price move up about $40 from the bottom. As we talked about over the last couple of days, I didn't really see any kind of major resistance or any real resistance coming in at our 200-day moving average. And I also don't believe that we would have had any kind of real resistance at the 50-day moving average, which is a screen line. And we saw exactly that in today's trading, as current pricing is now well above the 50-day moving average on a closing basis. Inasmuch as we are currently long, from well below current pricing, we also have a relatively loose stop, which is sitting just at or just below 1243. That's these lows here. On the last show, I talked about the fact that we are at this point looking to move stops up, and I wanted to give you a sense of where I'm looking to move these stops to. Support and resistance are part and parcel of the same things. In the instance of 1264, that price point, we can see that it absolutely was a level of support prior to the market breaking below this price point, and therefore it would have become resistance. The move back above that, to me, signals the fact that we now are looking at this price point as support again. So we'll want to move the stop somewhere just under the 1264 price point. Another quick observation over recent activity in the market is, as we approach this 3-day holiday and really the holiday season with New Year's coming immediately following Christmas, we have seen an absolute decline in volume, and I believe that we will see volume continue to decline following the Christmas holiday as we get closer and closer to the end of the year. The other thing I believe we can say with pretty good certainty is the fact that this recent activity over this last week has absolutely confirmed that what we witnessed on Tuesday of last week, when these lows hit 1238, was a key reversal in the market, because that V formation is fully formed at this point, and regardless of where pricing goes, whether it is a short-term or a longer-term recovery, we can say that we saw a key reversal in which market sentiment shifted from bearish to bullish. That being said, where can we expect gold pricing to head as we go into the end of the year and, of course, for the first month of next year? And my sense is we've got two things working in our favor in terms of a bullish slant. The first thing is that we have identified that there is in fact a seasonal tendency for gold pricing to bottom towards the end of a calendar year and have a major rally that would follow for the first part of the next calendar year. That has been evident in terms of historical data since 2014. The second thing is that the fundamentals behind this most recent move is the fact that there is a current belief that the monetary policy of the Federal Reserve next year will contain only 3 price hikes rather than 4. Based upon those facts, our current forecast model is looking for higher pricing in gold. We did speak about the fact that we could see some minor resistance come in at approximately 1284, 1285. That is a 50% retracement of the $163 rally that occurred in July and concluded in September. But I believe at best that is going to be minor resistance. I would look for our first level of resistance to come in at the 38% retracement level, which occurs roughly at 1300. The fact of the matter is we have seen this price point act as a resistance area before. We can see how once the price ascended above that, it literally popped fairly quickly to these highs at about 1363. And so therefore, my first target is going to be 1300. On a sustained rally, though, I believe we will make a stab not only for 1326, but if we have the price point break above 1300, I believe that there's a high likelihood that we could see 1350 to 1363. Therefore, my recommendation is to maintain our long position and look to trail our stops higher next week. Pop, pop, fizz, fizz. Oh, what a relief it is. For those of us old enough to remember, that was the tagline to an Alka-Seltzer commercial. However, younger subscribers might think that that is the most appropriate way to describe recent activity in the cryptocurrency Bitcoin. We are looking at a short-term 240-minute candlestick chart which contains all of the trading activity since a week ago Sunday when Bitcoin futures opened in the CBOE at roughly 15,000 and in 1 day's time went from 15,000 back to 18,000 only to retrace slightly back down to an intraday low of 16,000 before reaching Bitcoin's all-time high above 20,000, 20,500. Now, the fall from grace was extreme, it was severe, and it was quick because over a period of 5 trading days, traders witnessed a single Bitcoin, which had a value of in excess of 20,000 on an intraday basis, actually moved to just above 11,000, almost a 50% decline in a period of time of roughly 4 days. Now, there's a fundamental difference in the CBOE and the CME's trading platform in terms of the futures contract in that CBOE has no limits on the move, but the 5-coin futures contract at the CME does, which meant that today trading was halted as it exceeded the limit moves permitted by the mercantile exchange. Now, we have seen an extreme recovery in the market with Bitcoin's only trading down, and I say only, by $1,300 plus, currently at 13,950. The relief about this particular move is that many analysts, including myself, absolutely were convinced that Bitcoin was in a bubble, and it was simply where, in fact, we would see that bubble burst. The fact that we have seen this kind of a rapid decline gives us a potential that what we have witnessed was the bubble that many expected, and we could see somewhat of a recovery next week. The key is what's going on in the cash market, because unlike many other commodities where the volume matches physical sales to some degree or some percentage, I should say, overwhelmingly Bitcoin trading and pricing is a cash market phenomenon, because futures trading has to account for less than 1% or 2% of total volume on a daily basis. So it's going to be a matter of what we see over this long 3-day weekend, because Bitcoin will still trade in the cash market even through the holidays. That being said, in terms of a straight candlestick pattern, we can identify a couple of things. The first thing is that the bottom of this last candle, these lows, is absolutely a hammer. The other thing that we can say with some certainty is that there is a pattern also that can be identified, which is that of a three-river morning star. So I would look for a recovery and stabilization of price, but this market is young, it is unproven, and one thing that I can promise you is more volatility, more price swings next year. But the key to that is that volatility will create opportunities for us to trade in. Traders, as we approach this holiday season, we have to realize that we have so much to be thankful for, so much to be grateful for. And to add to that, we've got a pretty decent Christmas rally going on in gold. I am looking for higher pricing next week, but that in light of the fact that we will have thinning volume, and traders will be wrapping it up for the year, so to speak. So I expect that we could see some increased volatility. Bitcoin certainly provided us with the possibility of getting some real opportunity if we see prices stabilize at the current level. This has been Gary Wagner, wishing you as always good trading and wishing you a blessed holiday season. We will talk to you after the holidays on Tuesday. Bye-bye.